This is an example of how I like to do what I call the top-down market size. So it's a bullseye diagram with concentric circles. We start at figuring the size of the total addressable market. Then we estimate the size. Then we pick the target market within that addressable market. Then we pick the segment within that target market, and then we estimate our market share within that segment. And this will give us our not just the market size, but our year one revenue. So this will tell us how big is the market and how much revenue can we derive from this market in the first year. Now, this is a very simple approach. It's not necessarily easy to do because there's a lot of thinking that goes behind this. Key here is in defining appropriate total addressable market, and then in segmenting that market, so picking a target, and then identifying the right entry segment within that target, and then estimating market share. So you can see that we have to make a lot of assumptions at each stage, and there's many chances for error in this calculation. I'm going to talk after the break about error and how it enters into our estimation problems. But basically, like, let's say we're working in one company. It does virtual currency exchange. So in our current portfolio. So let's say we're trying to figure that out, work this for that company. So total addressable market could be the what? When we size a market, what unit of measure should we use?
Revenue. Money.
Dollars. So we could say, currency, or in this case, dollars. So total addressable market might be the total volume of virtual currency that's currently being traded times the commission on those trades. Our target market, now, which target market do we want to do? This is not given. We can do this in a variety of different ways. Maybe we're going to look at virtual currency in that breaks down into two fundamental markets. One is, let's say, three markets: digital currency, game currency, and cryptocurrency. And then in this case, we're going to target the game currency market. And then the segment within that, we're going to target only legitimate game currencies, meaning game currencies where the publisher sanctions trading. And then what percentage of that market can we capture? In year one, we estimate based on looking at the experiences of other companies that have entered similar markets, or if we can find a company that's been successful, and then we can back out what type of market share they must have had in the first year. And that'll give us our area at the center of the circle, which will give us our year one revenue. At the same time, subsequently, we do bottom-up revenue forecast and market size. So this, I realize, is illegible because of the projector, but here we have a simple business model with 3 revenue streams, and then we have the feeders for these revenue streams, and basically we just assign values to each of the key points in the feeder. We multiply those through the streams, and then we come up with a total revenue number. This number should match the total revenue forecast from our top-down analysis. So in this case, for example, maybe we make money on the spread, and we make money on fees, and we make money on advertising. So we have 3 contributors: spread, fees, and advertising. We calculate the total number of amount of spread that we can generate based on trading volume, and fees based on what percentage of customers are likely to pay fees and how we're going to price those fees, and advertising based on how much advertising we'll be able to attract based on number of users that we forecast. Now, after we do this process, is it likely that our top-down and bottom-up forecast will be the same? No, they're going to be different. Now, we take that difference and we use that as information to help us to refine our analysis. So we say, if top-down is higher than bottom-up, or bottom-up is higher than top-down, we look at which of the assumptions in our top-down and bottom-up are weakest, which are the ones that we can adjust most comfortably. We adjust those, and then we see if our results are converging. If that works, then we'll continue to do that until we get the same result from both our top-down and bottom-up. Now, this is not a mechanical process, so don't take away from this that we just manipulate our spreadsheet model, tune the parameters until we get the right result. What we do is we think at every stage, what is our weakest assumption? And is it weak in the direction that we are achieving an error in converging our results? And if so, adjust and see what happens. But we have to be able to go from any change we make in the model back to a qualitative analysis of the business model.